and welcome. We have a very special guest joining us today is Siddharth Jain of Inox India. Remember, Inox India listed very recently and had a bumper listing in the month of December. The stock since then has been on an exponential up move. This is the first quarter that they've reported earnings to the public, so Siddharth joins in to tell us about it. Hi Siddharth, thanks a ton for joining us. I guess you're getting used to reporting your quarterly earnings. This is the first of many firsts for Inox India at least. So thank you for joining us. Firstly, a quick update on how the quarter has been. You've been growing substantially, 25 to 30% growth year on year. It's been another good quarter, I believe, for Inox India.
Samina, good morning, and thank you for having me on your show. And indeed, this is the first quarterly earning for us for Inox India since we turned public. So I'm getting ready to start enjoying this quarterly, talk with you. So yeah, I think we have done pretty well this past quarter. On an average, we did about 295 crores in sales. We grew almost 18% year on year. Our EBITDA grew at about 22%, and so did our PAT. So, and this is consistent with what we've been saying during the IPO process. For the past 7 years, we have grown at an average of 20% a year, and that is the indication we had given to the market as well. And the way we see our business and our verticals growing in the future at, pretty much a similar average, not on a quarterly basis, of course, but because our, the products that we make have a longer gestation cycle. But if you look at it on an annualized basis, we certainly see this trend continuing at a similar growth rate that we have done in the past 7 years.
So it's fair for me to assume that a few quarters out, you will continue to grow at this run rate, 27, 30%?
As I mentioned, we have grown at 20% for the past 7 years. 27% would be a dream. I wish we get there. And, we're working towards it. Obviously, I can't predict the future, but I am pretty confident that we should be able to continue our past trend going forward as well. The business segments that we are in and the positioning that we have as a company, Inox CVA is the world's one of the world's leading players in cryogenic equipment. We've built an extremely strong brand based on 30 years of experience and a foundation for the quality of the product that we make in India is better, if not at par, to the best products being made in the world. And there are not too many companies globally making this. So, we are fortunate to have developed this in-house skill set. We make in India and we export to the entire world.
Right. So that couple of things. Your order book, I believe, stands close to 1,050 crores. I'm looking at the split. 50% of it comes from industrial gas. LNG is about 23% versus what we had seen in the same quarter last year was about 36% from what I understand. And cryo-scientific has also gone up. Any sort of indication of why the LNG order wins have reduced? I mean, of course, it has been supported by an increase in cryo-scientific, but just build on that and tell our viewers what's really going on there.
Yes, thank you, Samina. So, we have 3 divisions, as you rightly pointed out. We have an industrial gas division, LNG division, and cryo-scientific. And all 3 of them cater to a very different set of customer base. You can imagine, for example, cryo-scientific. These projects, where we get them from customers like ITER, these are global fusion projects happening in France, Germany, Switzerland. There's the CERN project, the FAIR project. When they give orders, these are multi-year orders, right? And they're very lumpy in nature. You'll get a large order in 1 year, then you may not get something the next year, and another large order the next year. So we can't measure cryo-scientific on a quarter-on-quarter basis. Similarly, LNG is slightly less lumpy, but it is still because you get these big regasification station orders on a global basis, whether it is a mini satellite receiving terminals, like we've done in Scotland and Antigua. We get orders on LNG, but we have a lot of orders coming in from South America, whether it's Chile, Brazil. So, the cycle of order intake is unpredictable in LNG as well. But when you look at it on an annualized basis, that's the way we focus on it. So every business is different. and our cryogenics business can't necessarily be measured on a quarter-on-quarter, year-on-year basis. Annual would be the right way to do it. And the industrial gas division is more stable. That is less lumpy in its order intake, and it shows in our numbers as well.
So that explain the order cycle to me, right? From winning an order that's showing up on your order book to actually executing to cash flow and completion. What is the usual timeline? I mean, what is the process of winning these orders, creating these partnerships, and of course, in concluding it and booking it as profits or top line?
So, Samina, about 75% of our order book comes in non-standard products, and 25% comes in standard products. The cycle time to execute is about 4 months, 4 to 5 months for our standard products, and 8 to 12 months for a non-standard product. So you'll see this, the order backlog that we have over 1,000 plus crores is, it will certainly get consumed in this year. And then on a monthly basis, we keep getting new orders as well. And those get executed within the year.
Right. When you talk to us about listing and wanting sort of people to know how the kind of work you're doing, talking about how putting India on the map, and this is such an interesting business and highly technical as well. How is the international market looking for you? From what I understand, in the third quarter, about 51% of your orders did come from outside versus 70% that we'd seen in the previous quarter. Give me a sense of any orders that could be potentially, coming through from the international market. Anything that you're in conversation with right now, quantify that for us.
So in fact, last quarter, our export revenue was, which was about 50% of our top line, was the highest quarterly revenue we had ever achieved. And if from an export perspective, and from the quarter perspective. But our export revenue was extremely healthy last quarter. Coming to order intake, the purpose of doing an IPO was in fact to gain, one of the main purposes was to gain visibility for our company so that we can reach a much wider global customer base, people that we had not been to earlier. And in fact, that has really, paid off. The kind of interest we have seen in our company in the past 2 months since we've gone public, is extremely heartening. And our teams are fully geared and excited to cater to that demand. And in fact, we just inaugurated a new plant in Savli outside of Baroda a couple of weeks back. We're making a new segment, the stainless steel beverage containers and industrial tanks. And a lot of that is going to be for the export business as well. So we're very excited about it. And, we're seeing a lot of traction in all three segments. Starting with Cryo-Scientific. Cryo-Scientific, we're really seeing the three large global projects increase their interest in us. We are actively pursuing, very large quantity of bids with all three, whether it's the ITER project, CERN and FAIR. And we certainly hope over the next 12 months to secure some, large orders there. Similarly, in LNG, we're seeing the adoption of LNG increase and more widespread in far off countries which did not consume as much LNG. The reduction in gas prices globally is really helping the adoption of LNG. We're seeing India, you asked earlier about our partnership with Adani Total Gas. We're super excited about it. Adani, of course, is one of the foremost players in India in the infrastructure space. They are extremely committed to expanding the LNG footprint in India, especially for heavy vehicle fueling. And we have the most diverse product line for the entire supply chain to move LNG. LNG is a product that's at minus 160 degrees centigrade. So if you have to build out an infrastructure for to fuel heavy-duty trucks on a pan-India basis, and you're moving a product which is at minus 160 degrees centigrade, there's a significant amount of technology involved in that. And we're very happy to partner with India's leading player on it.